Hello everyone, very good evening to all. I hope you all are fine and doing well. Myself, Saloni Gupta. Now, so today we have to start a very new unit, that is unit number 20. Yesterday we completed our unit 19 of module C, that is the credit management. The name of the module is credit management, and today we will going to cover its unit number 20, the credit delivery and straight through processing, that is STP. It is also known as STP. So yesterday we did a term loans, that is unit number 19. Today we have to start our unit number 20. Before starting, so we are launching our selection batch and classes will start very frequently. I guess from tomorrow onwards, my classes are being started from tomorrow onwards. So this is all in one course. You will be getting a lot of benefits in this particular batch. That is 250 plus classes we will provide you starting from ABM to BRBL classes. Early morning and late evening classes will be there. If for any reason you are unable to watch the live sessions, so don't worry, the recording will be there. So you can watch the recording. It will be 24/7. You can watch the recordings. You can download the PDF. You can go through the PDF. Then basic concept clarity. So we will provide you the concept clarity of each and every topic, each and every concept. Every week there will be live doubt and revision classes so that you can ask your queries, you can ask your doubts, whatever doubts you have in your mind, you can clarify them. Again, additional benefits what you are getting, you can download all the study notes even of YouTube. Okay, you can also download the PDFs for the YouTube as well as the paid classes. We are providing you the sectional test covering all the papers, all the modules. The section wise test will also be there. 50 case study and numerical based test and 20 elective paper test. So yes, please enroll as soon as possible. We will guide you in every stage of your preparation and medium will be English and Hindi. So I'm taking English medium for both the papers ABFM as well as ABM. So let's start the session. See, straight through loan processing or credit underwriting engine. See, yesterday we did what? Yesterday we did unit number 19, that is term loans. Okay. So this particular module C is related to finance, how you will going to manage your credit, how you will going to control your credit. If any type of risk comes, how you will going to manage the risk. Okay, different risks are there, different strategies are there. So what strategies you will take for minimizing the risk, for mitigating the risk. All these things we have learned few things in our previous modules, and rest of the things we will be learning in our coming units. Now, so in previous units we have studied that how we will arrange finance for working capital, how loan appraisal is done, how loan sanction is done. This we have seen in our term loans, or how much finance is to be disbursed. Now now today in this particular unit, okay, what we will see, that we will see the disbursement of actual disbursement of loan to the customers, to the borrowers. We have seen, because see, loan takes a lot of phases. Like, if I say that you have to apply for the loan, okay, after applying for the loan, then the loan appraisal is there, loan sanction is there, then the disbursement comes. So what happens, actual disbursement is what, the last stage of the loan to the borrower. So in this particular unit we will be seeing the how disbursement is done to the borrower, the credit delivery, that is credit delivery. That is what the name of this topic is. Okay, consortium loan, syndicate loan, then types of risk, diversification of risk, how much percent of equity promoters are required to bring before taking any kind of project loan. So all these things we will going to cover in this particular unit. So what is straight through loan processing or credit underwriting? See, for STP, If I say that for STP, the short form is STP. So if a borrower wants to take the loan, first they have to apply for the loan. The loan application is there. Then after that, loan appraisal is there. Okay. Then loan sanction is there. After that, loan disbursement is there. So you can see that a borrower has to go through different stages in order to get a loan from the any financial sector. So all these will take a lot of time. All these will consume a lot of time. In order to make it easy, in order to make it less time consuming, so we what there has been done a full automation, that is straight through loan processing means full automation of the entire cycle of the loan. So it will take a lot of time. It is a very time consuming process. In order to make it less time consuming process, so everything is being automated. The loan disbursement is being provided you online as well. So there is very less intervention of humans, there is very less intervention of the people. So everything is automated, that is it will take a lot of time. So in this way you can get the loan properly. In this way the loan disbursement is done in a very easy way. So this is what the straight through loan processing. So it helps to process more loans in minimum time. So in less time, more loans will be provided to every borrower. Suppose with the help of applications, so there are different borrowers. Okay, so with that, without automation, it takes a lot of time. All these stages they have to go through. When the automation is done, so with a minimum time, the maximum loans can be granted to the borrowers. That is what it is the benefit of straight through loan processing. I hope this is clear to you. Done? No. Now, what is documentation? Documentation means what? Everything should be recorded in the document. So, documentation and credit delivery, it means the process of collecting all the credit facilities, verifying, maintaining all the required legal, financial, and operational records necessary. So, whatever is necessary for giving the loan, for appraisal, loan appraisal, for loan disbursement, for loan application. So, everything is being recorded in a proper documentation so that neither borrower nor the lender gets any kind of confusion. So it includes the preparation and execution of loan agreements, collateral documents, identification, and it is legally enforceable and it is very transparent because no party gets any kind of confusion in this. So what are the key objectives of documentation? That it should be properly stamped. Document should never be earlier than the date of stamping. It is not the date of stamping is 2nd January and the documents is being prepared on 28th December. No, the date of execution of documents should never be earlier than the date of stamping. Place of execution should be mentioned in the documents. Okay, when both parties are signing the documents, so they should sign with free will. There should be no such kind of coercion in signing. It should be filled the document should be filled in before these are signed and it has to be registered with ROC within 30 days from the date of execution to the documents. So in case of companies, the charge should be registered with ROC. So these are the some objectives of documentation. Now, disbursal of working capital loans. See, what happens working capital loan when a company is being granted, okay, when it is being given a limit that like 50 crores limit is for your company for working capital loans, 60 crores are the limit. So RBI has given some guidelines in this disbursing of working capital loans. What happens if any company is being provided, let's take 100 crore loan. Okay, what that company will do, company is being granted working capital loan as 100 crore. So if company will take all the money 100 crore, so there will be a, you can say a banks, the performance will be very low. Okay. Again, when the company has got the money, the company will put into the bank. the inflation, the outflow and inflow of cash is happening very soon. Okay, it is happening at a very large scale. That is 100 crore. It's a big amount. So every bank cannot offer this. Yes, bank has given you that the limit is 150 crore. So you can take 10 crore, you can take 30 crore. If you suddenly take 150 crore, then what will happen to the bank? The liquidity crisis will be there. So in order to solve such kind of problems, what is the limit has been set. In case of borrowers enjoying working capital credit limit of 150 crores and above, when the borrowers have got the working capital limit of 150 crores and above from the banking system, so there is loan component should be 60%. It means 150 crore, the limit is given to you that you can uh, take the help of 150 crore for your working capital requirements. Now, what bank has done that, okay, 150 crore I have given you the limit, but you cannot take out at the time more than 60%. It should be 60%. The loan component should be 60%. Means at a time you can take only 60%, not more than that. That means 150 crore, the 60% of 150 crore you can take at a time. After that you can take, but not spontaneously you can take the whole amount. The only 60% is being given. So they have the freedom to change the composition. So banks again, bank is the leader. So they have the freedom. They can change this percentage criteria from 60 to 40, from 60 to 80. So by increasing loan component, so they can increase the loan component. The amount and time period of the loan component may be fixed by bank, and it is in the consultation with the borrowers as well. So both should agree on the proper thing, and the tenure should not be less than 7 days. Undrawn portion of cash credit overdraft limit sanctioned to the foresaid large borrowers, irrespective of whether unconditionally cancelable. See, what is maximum limit that bank can disperse loans? Okay, so basically, what happens in such kind of is there? See, suppose let's take an example. Your limit is, let's take an example, 50 crore. Okay, bank has given the borrower a limit of 50 crore, but you have withdrawn 60 crore. Now, in this case, what happens? 60 crore you have overdrawn. You have overdrawn how much crore? 10 crore you have overdrawn. So bank says that, okay, overdraft limit I'm giving you, it's overdraft limit of 20%. Means you can withdraw 20% more amount, whatever the amount it is being granted to you, but not more than that. So you can only withdraw more 20%. That is overdraft limit is 20% and it is only for large borrowers, not for small borrowers. The overdraft limit sanctioned to the foresaid large borrower, irrespective of whether unconditionally cancelable or not, shall attract a credit conversion factor. So credit conversion factor is given how much of 20%, not more than that, and it is only for the large borrowers. Okay. So if you have done your rating like CIBIL rating, so you have seen this word credit conversion factor. Means government has given you that you can withdraw 100 crore, okay, but you have only withdrawn, you have only taken 10 crore. So this is what, this is under credit factor score, okay, in case of CIBIL. But in this case, what happens? You can overdraw up to only 20%. So the limit is being sanctioned. Now, term loans. So term loans are what loans? Again, I have told you that how much percentage of equity promoters are required to bring before taking any kind of project loan. So every promoter is what? Promoter is what? The owners of the company. Okay, clear? So promoters are how much percent? How much percent of equity promoters are required to bring before taking any kind of project loan? Before any kind of project loan. So this is all about term loans. So RBI guidelines in respect of disbursement of project loans. So for project loans, what is the disbursement criteria? That at the time of financing projects, banks generally adopt one of the following methodologies. First, promoters bring their entire contribution upfront before the bank starts disbursing its commitment. So bank says what? Okay, I will give you the money, I will grant you the money, but at least you have to bring this much criteria of your own money. Then only I will up then only I will give you the upfront. Okay, then only I will help you out. So this is the commitment of what? The bank to promoters. So how much amount the promoters have to bring? Promoters have to bring certain percentage of their equity that lies between 40 to 50%. And the balance is brought in stages. Okay, so down payment is from like down payment, the promoters their equity 40 to 50%, and the rest of the balance is to be brought in different stages. Clear? After that, once this phenomena is pulled, this upfront fees is given, okay, upfront equity is given. Then after that, whatever the loan is being granted to the promoters, then that loan the bank will pay. But before that, bank says that this much percent of equity you have to bring before taking any kind of project loans. How do I know that you are taking a loan for for this purpose, for this project? No, I cannot believe you. So first you bring the money, after that I will grant you the loan. So promoters also agree in this. Promoters will agree that they will bring in equity funds, and after that bank will finance them the debt portion. So rest of the portion will be financed as debt by the bank, and half of the percentage they have to bring money. Now, syndication of loan. See what happens syndication of loans. This basically happens for the sharing of risk. Now, suppose let's take an example. There is one company, ABC Limited company. Okay, this company is being involved in the project of, let's take like water saving project. Okay, water saving project, and this is very you can say very expensive project. Let's take an example. It takes around 100 crores, the worth of 100 crores loan this particular company wants. Now this company goes to which bank? This company goes to SBI Limited. Okay, SBI Bank. SBI will say that, okay, you want 100 crore, but how do I know that you will take the money 100 crore and you will return it back? Okay, I don't believe you completely. So in order to make this risk free, what bank will say? Bank will go to different banks. They will approach to different banks, like they will go to Punjab National Bank, then Union Bank of India, then Canara Bank, then Allahabad Bank, and they will say that, okay, let's together disburse the loan of 100 crore to this particular company so that the risk may get less. If the if the money, if you make any kind of default, or in this project if you got a lot of few loss, okay, in order to attain a profit you get a loss. So how I will going to recover my money? So I alone will not give you the money. Okay, we will come together with two, three, four, five banks. Okay, I'm not going to become a single lender. Four, five banks will come together and then we will give you this money. This is what loan syndication of loan, or you can say loan syndication. So loan syndication refers to the process where a group of lenders, usually banks or financial institutions. So these are the group of lenders: PNB, Union Bank of India, Canara Bank, and let's take one more example, Allahabad Bank. So now four banks come together. They come in a group of lenders, usually banks, come together to provide a large loan to a single borrower. So this is the single borrower, and he or she, this particular company wants 100 crore of loan. Now 100 crore loan is a very huge amount. It's a very big amount. So no single sole banking will provide you the money. All bank will, two, three, four bank will merge together and then they will provide you the money in order to make it more risk free. This arrangement allows lenders to share the risk. In this way, what happens? They will share the risk resources while enabling the borrower to access large sum of funds and than any single lender might be willing or able to provide. So a single bank cannot provide, although four or five banks will come together and then they will provide you the loan. It is bit different from consortium. There is a lead bank. And when a single company deals in different projects, and for fulfilling the needs of all these projects, four or five banks will come together and one bank will become a lead bank, then they will provide you the money. So loan syndication is very different from consortium loan. Okay, don't get confused between these two terms. Syndication of loan, it is used for the one which is very important, I'm highlighting. Sharing for long-term loan borrower by two or more banks. This is the way of sharing the risk associated with lending. Borrower intending to avail the desired amount of gives a mandate to one bank, lead bank, to arrange for sanctions for the total amount. The lead bank approaches various banks while with the details. These bank appraise proposal as per their policies and risk appetite and take the decision. The lead bank does the license work and common terms and conditions of sanction may be agreed in a meeting. So there is common terms and conditions that is agreed in a meeting. So there is one lead bank that will normally manage all the things. Normally the lead bank charges syndication fee from the borrower. So here what happens? Here the SBI becomes the lead bank. Okay, SBI becomes the lead bank. And here the lead bank concept is not there. So sorry. Okay, lead bank concept will not be over here. In consortium, what happens? Four, five group comes together. Four, five groups of bank comes together, and they will grant the loan to a person who is uh, doing different, who is taking the loan for different business purpose, not only for single business purpose. Here, what happens? Here, only one single business purpose is there, and in consortium, we have different business purpose. Done. Am I clear with this? Now, so normally lead bank what charges the syndication fee from the borrower. So this lead bank, okay, all the guidelines they have to follow of the lead bank and the single lead bank will follow a syndication fee. Here, tell me any doubt to anyone? If you have any doubt, then please ask me. Okay, so it was all for today. Hello, so this was all for today. Let's meet tomorrow. I hope everything is clear to you. If you have any doubt, I'm waiting for 2 minutes. You can ask all your doubts. Okay, I guess nobody's having any doubt. Everything is clear to them. Chalo, let's end this session. We'll meet you tomorrow at the same time. Till then, take care, everyone. Goodbye.